an exciting, fast-paced tax webinar planned, saving and paying taxes. So with that, we'll get started. I'm going to be your guide today. I'm Tim Kenny. I'm a CPA. I've been at it for 35 years. And today is something that all of us have to do. And this comes to mind at this time of the year, with April 15th being next Tuesday. So little bit about a little legal disclaimer. We're delighted that you're interested in this content, and feel free to use it, but just let us know if you're going to use it. A little bit about us. We're passionate about helping clients build businesses and their net worth that support their fulfilling lifestyles. We have clients at all stages, from startup to ones that are very mature, multiple generations. Worthwhile plans take time to realize, and we work with our clients to create custom plans that fit them and their businesses. So a little bit about today's agenda. We're going to talk about the right approach to taxes, give you an overview of paying tax, look at the W-4 form, which is, for most practical purposes, a completely separate tax form, as you'll see. And then if you own a business, I'm going to give you a better way of fulfilling your tax payment obligation, and then talk about next steps. So this is what we consider the right approach to taxes. Essentially, the finished product is a properly prepared tax return that gives you peace of mind, knowing that what is reported to the taxing authorities is proper and supported. Now, some of that is a joint effort between us and our clients. So part of working with us is us providing you with content like this to educate you on what you need to do to support your deductions, etc. And so in doing that, we are also looking at making sure that your return is prepared in a way to take advantage of the tax laws that reduce your liability, but don't expose you to additional risk. We want all of our clients to sleep well at night. And that is what we consider the right approach to taxes. So now that we've got the tax return prepared, we got to look at, how are you going to pay these taxes? Some of that is dependent on who you are, right? So we've got clients that are employees. In the case of a business, a lot of small businesses, the majority of small businesses today are S corporations. So as an S corporation owner, the business owner is considered an employee of their business. So what does that mean? Well, that means that the business owner is going to receive a W-2. They're also going to receive a K-1. And so if you own a business, most likely you're going to be paying estimated taxes each quarter. And as you know, those of you that are employed, and I would assume that probably for the most part we all are, and you're going to have withholding out of every paycheck. And the idea of the withholding is it's going to cover the tax liability related to that income. In the case of a business owner, the profit of that business is passing through, in the case of an S corporation, to the owner and somehow those taxes need to get into the IRS, get into your state Department of Revenue. And that's not accomplished necessarily through withholding unless you specifically or strategically plan for that. So you'd have to either make estimates or add additional withholding to your paycheck to cover that tax liability. So the W-4 form, as I mentioned earlier, it's like a completely separate tax form. It can get so complicated, especially if you've got other sources of income. In the case of the business owner with an S corporation, that's one of the instances. Now, if you have multiple sources of income, you're required to get into the meat of the W-4 form, realistically. If you just have one W-2 job, then really all you need to do is check your filing status, whether you're single, married filing joint, or separate. And if you wanted to avoid the complexity of this return, another option is to figure out how much you're short and add that down here as extra withholding. But if you're real simple and you just have one job, you enter your filing status, sign the form, and essentially you're done. Now, it can be a little bit of a trial and error in many respects, in that come April 15th, if you're finding yourself owing, then you want to address that by updating your W-4 form. This is an annual form. This is the 2025 version, and you should be filling one of these out every year. Now, if at the end of the year, you've got a few bucks that you're owing or that you're receiving back as a refund, you're pretty good. So you may not need to adjust anything. However, if you're owing a lot, you're going to need to spend some time and look at this. So just kind of looking at this return, the W-4 form, there is an app at irs.gov that you can use to calculate what your withholding should be, and or you can use this form here to kind of work through that. If you're a client and the rest of this form relates, probably the best bet is to pull your documents together and schedule some time with us to work through it. If you are an app person, you can try the IRS app. But as you'll see, you want to collect some documents before you enter the app. It's free, so there's no issue with trying it. The documents that you'd need would be pay stubs for all your jobs, other income, and your most recent tax return. So better than just estimates is a plan to save as you go. So one of the methodologies that we ascribe to and work on our clients with is profit first. So this is one of the key tenets of profit first, is saving for taxes. And it's just like it sounds. Every dollar of income that comes in, you're taking a percent and you're putting it into a separate tax account. And that tax account is growing as your income is coming in, so that when it comes time to make your estimated tax payments, you've got the funds sitting there. And that's half the battle. there's nothing worse than owing a tax liability and you don't have the funds available because the business has used them for other expenses. So how that works, and this is uh, an example of saving for taxes. The easiest way is to figure out, based on your revenue, how much of each dollar of revenue needs to get put into that tax savings account. So looking at a couple examples, this is a more detailed example, but I think it's good. So in our first scenario, they've got a 44% tax rate. So when they owe, or when they earn a dollar, collect a dollar, they put 44 cents in that savings account. And this is based on a 20% operating profit. So you can see as the tax rate lowers, so does the amount of savings that you're having. And so the bottom line here, figuring the 20% operating profit, is 9 cents out of every dollar if your tax rate is in the 44%, 6 cents for 30%, and 5 cents for 25%. So just kind of working through that math, it's essentially you're multiplying this out to kind of figure out of every dollar how many pennies are going into that savings account. A simpler method might be the approach to profit first, which is to just take 15% and move that money into a savings account. And that may be more than you need to pay your taxes, but if it is, that extra amount that was saved into your tax savings account, that can just be an additional profit savings or an additional distribution at the end of the year by not needing that to pay your taxes. So here's carrying out that example on a weekly basis. And next, now that you've got the money into a separate tax savings account, how do you pay them? So one thing that is changing with the IRS is they're going more toward electronic payments. And in fact, in August, they're not going to be taking paper check payments of taxes. So you need to get set up to pay your taxes electronically. And it's easy. And everything that you need is on our website. So if you went to kennycpa.com, and let's see if I can use this link. Just to show you what you'll experience when you go out there. It'll bring you to, if you go to kennycpa.com and then click on webinars, it's gonna bring you to this page, and you'll see that there's a link, making your tax payments online tutorial. And this is a great resource. So working off of this website are links to the federal options as well as Illinois'. So EFTPS stands for Electronic Tax Payment System. And so if we click on that, that's going to bring you to a short video, which gives you screen prints of the EFTPS system. Now, as you'll see, if you're not enrolled, you need to enroll. The good thing about EFTPS is you'll have a private account with the IRS. And what that allows you to do is go in and make your payments electronically. In the case of estimated tax payments, there's 4 that need to be made. And so you can schedule all of those out at one time and be done with it. Remember, though, when you schedule those out, that you need to make sure that there's funds in the account to cover those. And if you're paying your taxes out of a separate tax account, that's going to be very easy to do. Now, the link is also on our website. So that'll bring you to this page right here. So you click enroll to work through the process. If you've never enrolled, one thing that you're going to need is a copy of your recent year's tax return, and you also need to have a voided check for the account that you want your tax payments to come out of. So if you have those 2 things, you'll be able to get through the enrollment process, and then it'll congratulate you and advise you that you're going to be receiving a PIN in the mail. And so the PIN is what you need to complete the process. So if you need to make a tax payment, you're not going to be able to enroll and make the payment right away. This is going to be a week, 2-week type thing that you're going to need to work through, which is good because there's definitely some controls in place to make sure that your identity is protected. But once you're in there, you're going to have access to the site. You can run a report and print out details on all the tax payments that you've made. So we love it because our clients can give us all of those details that we need to complete their return, reflecting the payments that were made accurately. Now, if you go in and enroll and you need to make a payment that day, you're going to need to use the other option, which is the direct pay, IRS direct pay. And you'll see a link to a video. So these videos are helpful because they show you screen by screen what to expect. And also on our website, you'll get the correct links. In the day and age of identity theft, you've got to make sure that you're on the right website. So that's another reason to go to our website, is kind of like a launching off pad. So if you click on this will bring you to the IRS direct pay. Always make sure you're on the IRS site. Vendors might set up shop very similar to the IRS site. So it's best to double check and make sure that you're on the right site. But this would allow you to make a payment same day. You're going to also need a copy of last year's return because there's a verification process to make sure that it's you, and make sure that it's hitting the right account. So there's some protections in place. I think it's well done on the IRS's part here. And then there's also a link to Illinois. So if you're having to make Illinois payments, here are the details here. Now with Illinois, you don't actually need to have an account set up, but you're going to need to verify your identity. So again, copy of last year's tax return, driver's license, some other ways to establish your identity. But this video will walk you through it. So use our website. This link is going to be invaluable if you're new to making your your tax payments electronically. It's easy. It just takes a little time, especially the first time. Allow yourself a little extra time to make those. Okay, so let's jump back. This is a little more about the enrollment process, but again, it's easy once you are at our website to go to the links and make sure you're on the right spot. So armed with a plan, you can do it. Most important thing is to never fall behind on paying your taxes. It's really hard to get out of that. And the best scenario is like eating an elephant. How do you do it? Just one bite at a time. So the one bite at a time is with your collected revenue coming in, taking a percentage of that and moving it to your tax savings account. And if you're looking to just get started, start with 2%. The target that Profit First identifies for tax savings is 15%. Many times that's more than's needed, but there is no issue with saving too much, because if you've saved more in your tax account than you need to pay your taxes, anything extra is just an extra profit distribution. So, but again, Rome wasn't built in a day. So start where is comfortable and just start doing it. You know, paying taxes are no fun, but when you have tax money or savings sitting in an account that you can draw from to pay the taxes, it's not as painful. So your next steps: set up a low-cost savings account for taxes, estimate what your percent of revenue is tax-wise, but just start. If you can only start with 2%, start with 2%. And then each week, transfer the amount that you calculate. So your total collections for that week, apply your percent, move the money to your low-cost tax savings account. There's even certain banks that allow you to set up a transfer rule, so it'll automatically move the money. And then use the funds in your tax savings account to make your quarterly tax estimates. Get set up to pay your taxes electronically so that process is easy as well. So those are the best practices for saving and paying taxes. So we've got a little time left over. I'm going to just stop sharing my screen and open it up to any questions.
So, Tim, I just wanted to share a quick personal experience of what you're talking about, which is, as you know, I set up the accounts for my payment, and I have a separate bank from my main bank, and the money was going over there to pay for my taxes. And it's strange to say, but I thought, after a while, I thought, what is this money? Where is it going? And then I just filed my taxes, and actually I had a positive, I didn't need to give more taxes. And so I went over to the account, and there was this extra money that was saving. So exactly what you're talking about. So I was like, well, now I can go on a holiday. So
There
I
you
thought
go.
that I would just give you that personal experience of how.
I love it. So proof's in the pudding. And
There you go.
you did the first part, showing up to learn about it, but just give it a try. Once you experience what it's like to have money in an account to pay your taxes, you'll never want to go back. And having more in the account just gives you the opportunity to do like Susie and go on a holiday. Wow. Thank you for sharing that. Anyone else? Any questions? Any relevant experiences? Have you tried this?
Hi.
Hello.
Yes. My name is Hannah. I just wanted to see, I've been trying to practice the profit first principles, and I wanted to see the weekly breakdown because I do it monthly, but you had a slide that had weekly estimates that I wanted to try. Can you show that slide again, or are you going to be sending us this information?
Well, we'll have this, we'll have the webinar posted on our website,
Oh, okay, good. Okay.
probably within the week.
All right.
But is it Anna?
Hannah, yes.
Anna. So Anna, that what those slides were more toward like a nonprofit first approach, but profit first is even simpler. Profit first, if you look at profit first targets change as the revenue of the business changes,
Mm-hmm.
right? Do you remember that in
Yes,
reading the
yeah.
book? Okay.
Mhm.
Now, if you looked at all of those side by side, the one that's not changing is tax,
Yes.
right? It's always 15%. So Anna, to make it simpler, all you need to do is take your collections. If you want to go on a weekly basis, what did I collect for this week? And then apply the 15%. So let's say in 1 week, you have revenue of that you collect of $10,000. Are you with me?
Yeah.
Applying the 15%, you're moving $1,500 into a tax savings account.
That makes sense. Yes.
Does that make sense? Now, one thing that I've done for clients is I set up a Google Sheet that they can access, and all they have to do is just put in the revenue collected for a particular week, and it'll calculate through. So they know it takes the mental math
The
out of
math
it.
out of it. Yeah. Okay.
And the other benefit of that, Anna, is when you look back, you can see exactly what you did. So it'll help you get a better understanding of your cash flow as well.
Yes. I'm trying to do that.
Well, it's the best method. And I think a Google Sheet that you set up and you start using that way is going to give you greater comfort and understanding of your cash flow, and then also it'll make moving the money that much easier.
I like the system and I use it for one of my other businesses. The only issue comes when you have to submit your bank statements for something. Like you have a grant, or you're applying for a grant, or you're applying for something and you need to submit a bank statement, and then you have all these different accounts. It makes it difficult to give them a picture.
Oh, just from the standpoint you have to give them multiple bank statements versus just having one and give them the bank statements for that account.
Right.
That makes sense. That
Mhm.
makes sense. Yeah. But it's worth it.
It's worth it, yes, for my own peace of mind. Yes. Thank you so much, Kenny.
You're welcome. Thank you. Great question. Thank you for that. Anyone else? All right. Well, again, if you wanted to review this again, we're going to have the video posted on our website probably within the week, and we'll have another webinar next month. So each month you can count on us to put out some relevant content for that time of the year. And again, thank you, and we appreciate you and enjoy the journey.